We are now in conversation with Amit Mahajan, the director at Paras Defense and Space Technologies. Amit, good morning. Thank you for taking the time out. Amit, it's been yet another staggering quarter for you. In fact, for the second straight quarter, we are actually looking at a considerable amount of growth on the top line, which has clearly had its impact on the bottom line as well as the operational numbers as well. Your assessment of what's going on, what is the reason behind the 73% growth in the top line for the quarter gone by? And I'm only making an assumption that this is not the normal growth. Eventually, you will see a little bit of moderation tapering down, even as we see the base effect come to play. But your expectations with respect to this financial year, based on the kind of trends that we've seen in the past two quarters?
Firstly, good morning and thank you for having me on this show. Uh, I would consider the driving force behind any growth, for that matter, is the amount of opportunities that a particular company has, and we have a very solid lineup of funnel and opportunities for the work that we have done in the past. What we are going to get in the future is yet even bigger. But what we have done in the past, we have a very solid lineup. Our opportunity funnel is in excess of thousands of crores. And the order book, which is very strong, at least 2x order book that we enjoy, I think that is one of the reasons why we could deliver what we have been able to deliver. Now, looking at Q1, I'm telling you that the trend will continue at the end of, we are a project oriented company. We should be looked at on a yearly basis. On a yearly basis, we are looking at about 30% or slightly 30% will also be a little conservative, but in excess of 30% growth.
Okay. So based on that, what are the areas that are in fact playing out for you in your favor, Amit?
The areas, if you see last quarter, I'm talking about the Q4 of last year, optics, there was, because we're getting from component business into a product business, the optics, optronic product that we were, which is a high value one, which got shifted to Q1. This particular product will play out as almost every quarter. And the optics and optronic systems is one extremely scalable business. And at the same time, it is very profitable when it comes to the company and the business. So we would always want to make sure that optics and optronic systems is the vertical that influences our revenue, and that will be our growth strategy moving forward.
Does the optics and optronics segment also provide you the bulk of your operating margins or the expansion in operating margins? If you can classify that for us.
Absolutely correct. So they provide not just the revenues and the scalability, but they also provide the operational margins. They actually go and compensate the competitive business that we do in, say, defense electronics or, mechanical engineering. So they give you the bulk of your profits.
Sure. So Amit, going forward, I know, and we understand that your current order book is at around 630 odd crores. This was the FY24 number that we had. If you can give us an update on your current order book, also the kind of projects that could perhaps be in the pipeline that could, come through going into the next couple of quarters.
So now the order book continues. Yes, we have delivered some, and there is, you can see whatever we have delivered has gone down, but again the order book will start swelling again from Q2. The kind of projects that we are looking at projects coming in from EOIR systems. We are looking at projects coming in from the space domain, because the space sector is again warming up. We would look at defense electronics to continue growing, because although we are in a competitive space, the competition is relatively very limited. And our defense electronics is like spider. It has gone almost in all the programs we are there. So those programs are getting into higher volumes. So basically you see the percolating effect of defense manufacturing in India, Make in India effect, and the Atmanirbhar effect. You will be able to see on the order book. So on the defense electronics side, the EMP, the electromagnetic as a vertical, not just on the pulse side, but electromagnetics as a vertical is also having good amount of opportunities. That particular vertical itself has more than, I would say, 500 to 600 crores worth of funnel in front of us. So if you go and see, all the sub verticals of our company have strong opportunity funnel in front of us.
So, Amit, the question here is that are you guys going to actively continue to focus on optics and optronics while you get orders passively when it comes to defense engineering as well? Is my understanding there correct? Or are you also looking to perhaps grow in defense engineering? And under those circumstances, what sort of projects are you aiming for when it comes to the defense engineering projects?
So, optics and optronic systems, like I'm telling you, there are certain products that are under our belly. These products give us a lot of scalability. Notwithstanding that, I wouldn't, it is like your two children, right? You can't choose between one and the other one you let go. So, engineering vertical, if you see, they have three sub verticals. One is the mechanical engineering, which is required and rather fueling almost all the other sub verticals of our company. Then there is electromagnetics. So in electromagnetics, we have a very, very unique positioning. In the country, we are the only company doing electromagnetic pulse protection. Now we're getting into larger projects related to electromagnetic solutions. So that is a position that we would not want to let go. Yes, it is picking up slowly as compared to optics or defense electronics. But it is, when it picks up, it becomes a very, very big sub vertical in its own domain. Defense electronics. Now, when I'm saying defense electronics, see, electronics, although it's a competitive market, the opportunities are way, way higher than any other vertical that you can think of. So, although there are competitors, everybody has their own share of business, and the size of opportunity per company, if I have to divide, is very huge. So, although we as a businessman, we would want optics and optronics to do good, but I would not play down on all the other sub verticals of ours, which are our core strength, which are also our unique positioning in some way or another. Apart from that, what I would also want to get to the table is the anti-drone subsidiary of ours. Then there are other subsidiaries that we have started work on. So all these, you have to look at fueling all of these such that they pave the way for your opportunities 2 to 3 years from now.
Scope for the next indigenization list to have that could possibly involve products and services that you are catering to, but they have not been in the list earlier?
There are a lot of technologies currently, and on the optic side, I am very, very happy to see that there are 5 lists. Every list has contributed to opportunity for a company like Paras Defense. Also, somewhere which used to look like a, look like a very sluggish strategy 10 years back, that we have almost all the products that you can think of. We call ourselves as one-stop shop for defense technologies. Used to be a very risky domain 10 years back, but today when you look at every manufacturing that you need to do in India, Paras becomes your obvious choice, because we have had a good heritage of working on those technologies in the past. Now today we have an option of becoming not just self-sufficient for the Indian requirement, but also we can blossom these technologies for being world ready and start exporting them.
Amit, in some sense, the stuff that you're saying, good morning, Neeraj here, the markets are rewarding you for that, right? Because as it is rewarding the defense sector at large, but in your case, I'm just saying that the multiples that your stock trades at is a clear vindication of the fact that the market believes in some of the things that you say. Now, my question is, would the market be right in believing that there is a J-curve growth ahead of you at some point of time in the next 1 to 3 years, whenever you take advantage of all of these factors that you spoke about, the spider-like spread, presence in multiple places, etc. Does it show in a growth of your top line numbers in a bit of a hockey stick effect at some point of time in the next 2-3 years?
As much as I can tell you that I'm really grateful for the market to bestow so much trust on us, I will tell you, for us, it is business as at usual. So what we always do is, we don't look at how the market is going to go respond to what we are trying to do. What we always ensure is our business growth should be sustainable.
Amit, sorry. Amit, I was not trying to say that you are following the market. I'm just saying the market trusts you. You're mentioning that you have so much of presence. So I'm telling you that the market trusts you. Now, my point being, the market also believes that you will do that. Is the market right in believing that there'll be a Jacob effect in growth?
The market should believe that the business has to be sustainable. J curve, if it is in good for the company in the long term, if somebody believes, I have my doubts about it. The company always would look at growth which is sustainable in nature. So I would always keep a curve which is more linear in nature than a J curve, because linear will ensure your growth and it will be long term. J curve will someday will hit down as fast as it goes up.
Okay, and just one last question. What's the pace of that linear growth? Let's say, I don't know if you guys think about it that way, but if you do, then what is a 5-year, 7-year CAGR that you have in mind?
So we are looking at 20 to 30% when we say used to look very aggressive a few months or few years back. Today, when I say 20 to 30 is very conservative. And that is we would want to at least have that visibility for the next 3 years. Next 5 years, maybe it will be higher than that, but 20 to 30% is the growth rate you should be looking at from a company like Paras.
20 to 30% for the next 3 to 5 years, and post that period, the growth could be higher as well. The growth percentages could be higher as well.
Yeah.
With similar or better margins.
Margins will only be better.
Only be better. Okay, great. Amit Mahajan, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time this morning.